Okay. Can you guys see on the screen?
Hmm?
Can you see something on the screen?
Let me just make sure. Yes.
Okay, great.
Mhm. You are using a study guide for this fundamental accounting.
Yeah. So the first chapter, because I do not have slides of I do not have slides of Unit 1. We'll be using the study guide, while the rest of the chapters will be using slides.
Okay.
Yeah.
It's the first page. What?
Yeah.
First topic.
Yeah. First topic, Unit 1,
Okay.
framework.
I got it.
Okay.
Okay.
Um. So this meeting is limited to 40 minutes. So once it ends itself, then I will reopen it again. Then you guys can join. So
Okay.
I'll be recording the session. Whenever you need the recording, just let me know so I send it to you.
Okay.
Yeah. So the
Maria.
framework for the present framework for the preparation and presentation of financial statements. So unit 1 is just a theory unit. It has no calculation. It's just theory of the presentation, how financial statements are prepared, in what way, in what format, with what policies do they use to present
Mm-hmm.
financial statement. So
Okay.
what you need to know in this unit are just definition of terms, such as the framework.
Mm-hmm.
It's all that the framework deals with the objecting and fundamental theoretical principles that serve as a frame of reference for financial accounting. Meaning that this is just the objectives or the the references of financial accounting. How you prepare, in what frame, the word frame, in what way do you prepare your financial statements. So it also deals with the qualitative characteristics that determine the usefulness of information in financial statements. Ne? So what are the characteristics? Why are your financial statements very important? Why do you need them? And what are the characteristics? What do you need to look at when you are preparing your financial statements? So the framework also deals with that, and it also deals with the definition, recognition, and measurement of elements from which financial statements are constructed, as well as concepts of capital and capital maintenance. Meaning that, remember, we have different type of five elements there of financial statements.
Mm-hmm.
We have assets, owner's equity, liabilities, incomes, and expenses.
Yeah.
So those are the five elements. So the
Mm-hmm.
framework also deals with the how do you recognize an item? How do you recognize an item as part of a certain element? Meaning, for you to say that a car is your fixed asset, ne? How do you recognize it? What characteristic does a car have that determines that it's a fixed asset? Okay.
Mm-hmm.
So you should just know the definition of the framework, and then we move on to
Mm-hmm.
the uses of financial statements. Please, if you cannot hear me or if my connection is cutting, just let me know.
Okay.
Yeah. So we have uses of financial statements. Ne? We said that every business needs to prepare financial statements at the end of the period. Ne? So why do you think businesses need to present or to prepare financial statements? For who? So there are different users that are interested in your financial statement as a business. So that's why it's a must that if you're running a business, then you have to prepare financial statements because of those users.
Mm-hmm.
Yeah. So you should know all the users and their needs Why do they need the financial statements? So the users
Okay.
include investors, people that would want, people who would be interested to invest in your company. Ne? For example, you have a what? A company, right? A company, and you are selling shares. You understand? You have a company selling shares. So in cases where before before investors buy shares from your company, they will be interested in seeing your financial statements. Why? Because they want to see whether they will really benefit. Are they really expect, will they really expect a return? Ne? Or their money will just go to waste. After all, no one will want to invest in a company that is busy making losses. You understand? So they
Yes,
want
it's
to
true.
make sure, that their money is secured. They can't take risk of buying shares or investing in a company that is not doing good. You understand? So it says that these
Mm-hmm.
are the providers of risk capital, and their advisors are concerned with the risk inherent in and return provided by their investment. They are most interested in the return provided by their investment. Will they really get a return from their investment? If they invest, will they really get benefits? So they need
Oh.
information to help them determine whether they should buy or hold their investment. So that is the main reason why. And then we go to
Oh.
employees. Ne? We go to employees. Now, before we move on to the rest of the users, you should be able to determine the difference between internal users and external users. Ne? So
Mm.
internal users are people that are within the business, people who would want, or people that are interested in the financial statements of the business, but they are within the business. Ne? They work for the business. These are, for example, now the owners of the business. Obviously the owner would want to see if he or she is making profit. You understand?
Mm-hmm.
if his
Yes.
business if his business is in a good position to continue running in the foreseeable future. And then you also have the managers, ne? People that are running the business. They are also interested in the financial statements for decision making purposes. Before they make decisions of the company, they will need to look at the financial statements, because there's just no way they'll make decisions saying that, okay, in 5 years time we'll buy another plot while they are busy making losses. So the decisions are made according to what they are seeing on their financial statements. So that's the reason why they will need the financial statements.
Oh.
um okay, I think Maria's network is a bit bad because she just left.
Oh.
Yeah, she just left.
Mm. Ay, what's wrong now?
I don't know, maybe it's either she received a call or the network is bad. Because if you receive a call, then it automatically,
Out.
yeah.
But now we can continue.
I don't know. That will depend to you guys. Okay, here she is. Let me just quickly admit her.
Uh,
Yeah,
okay.
she's busy joining. Okay, so and then we have external users. Now, external users, these are people that are interested in the financial statements of the business. External users are people that are interested in the financial statements of the business, but they are outside the business. They do not work for the business. You understand? These are now
Mm-hmm.
the community members, the lenders, the suppliers, and so on.
Mm-hmm.
Yeah. So you should be able to differentiate between internal. If you're asked to give internal users of the business, then you should be able to give those users.
Okay.
Okay. And then now we move on to the employees. So we said employees are also part of the internal users. So why do you think employees would be interested in the financial statements of a business? So obviously, employees and their respective groups are interested in the information about the stability and profitability of the entity. Ne? So this simply means that they will be concerned, ne, of whether they are on high risk of losing their jobs, or
Yeah.
if whether the business is doing very well and they are busy being paid little salaries. So there are two things they are interested in. They would want to see that, okay, are we perhaps on high risk of losing our jobs? Because if the company is not doing well, obviously they will retrench. You understand?
Yes.
The company would want to cut costs. So they will retrench their workers. So that is why the
Yes.
workers are interested in the financial statement, to see whether the business is really doing good, or to see whether it maybe perhaps the business is busy making high profits while they are busy getting low salaries. Ne?
So
So
you
they
can
would,
get a financial statement if you ask from the company. They will give
pardon,
you.
pardon.
If I need a financial statement, I can get
It's
from the
your
company.
full right.
Like employee.
It's your right.
Oh,
Yes. You are also a user and
I
it's
need.
your right.
Oh,
Yeah. And then you have lenders.
okay.
And then you have lenders. Lenders are interested
Mm-hmm.
in, now when you talk of lenders are people that you borrow from, people that lend you money. These are, for instance, now the banks. Ne?
Mm-hmm.
Before, even as of now,
Mm-hmm.
you as an individual, you don't have a business, right? If you go to the bank today,
Mm-hmm.
do you think the bank will give you a loan
Mm-hmm.
without you showing your payslip?
Ah, they
No.
have to
So
check first.
exactly. So they first have to check whether you are really capable of paying back the loan. So
Mm-hmm.
the same with businesses. Before the bank approves a loan to a business, they would first ask for the financial statements to see whether this business will really be able to pay back, or they are just risking. Do you understand? So
Oh,
lenders are
yes.
interested in information that enables them to determine whether loans and interest attaching to it will be paid when due. They do any stories of when the loan is due, then the company will start giving excuses, or perhaps it will be dead by then. Ne? Then they will lose out.
Mm-hmm.
So
It's true.
that's why they need financial statements of the business. Okay.
Mm-hmm.
And then we move on to suppliers and other trade creditors. Suppliers and other trade creditors. Now, suppliers are people that supply your company with goods. You understand?
Mm-hmm.
People that you buy your goods from, your creditors. You understand? So let me
Yes.
say
Yes.
you sell cool drinks, ne? You sell cool drinks,
Mm-hmm.
then you buy your cool
Mm-hmm.
drinks from ShopRite. That ShopRite is your supplier.
Mm-hmm.
And remember, you can buy on credit. You will even want to buy on credit sometimes. Now,
Mm-hmm.
before your supplier gives you the right of buying on credit, they'll want to see your
Credit.
they'll want to see your financial statements, because they cannot just give you on credit like that, knowing maybe your company is not doing well. That's a risk. There's a risk
Oh.
they are taking. So they will be interested in your financial statements to see whether that you're really able to pay back their money on time. So
Mm-hmm. Okay.
these users need information that will assure them that amounts owed to them will be paid when due. They don't excuses come month end, you're giving excuses, no, the company is not doing well, we do not have money, blah blah blah, and so on. So trade creditor is likely to
Mm-hmm.
Now the trade creditor is likely to be interested in an entity over a shorter period than lenders unless they are dependent upon the continuation of the entity as a major customer. So these people are mostly interested in your current assets. Do you have enough money to pay off? Remember, their debts are paid within a shorter period of time compared to the lenders. Ne?
Mm-hmm.
Obviously, if I buy
The
something,
what?
the suppliers and trade creditors, these
Mm-hmm.
people these people would want you to pay their
Mm-hmm.
account within their accounts are paid within a shorter period of time compared to the
Oh,
lenders. Lenders are people that give you loans, ne? And a loan can take
yes.
up to 10 years to be paid. But when it comes to a supplier and trade creditors, these are the people that you buy today and you are expected to pay within 20 days or 17 days or 7 days. You understand?
Oh,
Yes. Even though
uh,
if you even let me say you go to game today or something, or maybe you have a friend that sells items, ne?
mm,
And then you buy something on credit. Obviously, she will tell
mm,
you that okay, at least pay by month
when
end. At least
Monday.
by month end, exactly. You see, they are
Mm,
okay. And then we have customers. Customers are
mm-hmm.
also users of. They are also users of financial statements. Now,
Mm-hmm.
customers have an interest in information about the continuity of an entity. They would want to see that if is the business really able to continue in the foreseeable future, or probably we are just wasting our money. Obviously, they would want a business that they a business that will run forever, a business that will continue running in future. Then they will feel like yes, this is a good business. We should still continue buying from that business. But if the business is not
Oh,
doing well, they wouldn't want to be customers of that business. So they'll change to other people. So
oh,
especially when they have a long-term involvement with or are dependent on the entity. And then you have
okay.
government and their agencies. You have government and their agencies.
Mm-hmm.
Now, when it comes to government and their agencies, these people are interested. These are interested in the allocation of resources and in the activity of the entity. So the government, remember, the government also plays a role when it comes to businesses. They give subsidies. They tend to help out companies. So
Mm-hmm.
before the government grants you a grant or gives you a subsidy, they'll obviously want, before the government helps your business out, they'll obviously want to see your financial statement to see whether this company is really doing well and it can really survive in the future.
Mm,
And they are also
it's true.
interested in tax. They are also
In
interested in taxation. Ne?
our taxation.
Yes.
Mm-hmm.
Every company needs to pay tax. So that is the main
Yeah.
reason. Let me say that is mostly the main
Mm-hmm.
reason why companies would want financial statements. They would want to determine the tax. Ne? Yeah.
Mm-hmm.
And then the last one, you have community or public. Either community or public is the same thing. So entities affect members of the public in a variety of ways. Entities often contribute to the local economy by employing people and supporting suppliers. So financial statements may assist the public by providing information about the trends and the recent developments in the prosperity of the entity and the range of activities. So basically, the public would want to see the financial statements of the business, mainly because they would want to see if the business is really does the business really help out in the community with donations and so on? Are they really
Mm.
employing? Eh? Are
It's
they
true.
really, is the business doing well to employ?
Mm.
Because if the business is doing well, obviously they would want to employ more people. But then if you
Mm.
just have a business in the community, it does not help out within the community, it's not employing people, Do you think the community will still want to be buying from your company? No, because
No,
you don't do anything to help out in the community.
to help
You
is
understand?
true.
That's why the
Yes.
community, or that's why the community or the public would want to see the
Mm-hmm.
financial statements of the business. So,
Mm-hmm.
any questions?
Everything is fine. We can go ahead.
Okay. Now, I don't know what's
Mm.
wrong with Maria. She left
She said
again.
we must record. What?
Oh, we should record,
Please
ne?
record to me. The electricity went off in our
Oh,
town.
oh, okay, no
Mm.
problem. It's being
Okay.
recorded. Yeah.
Okay.
Okay. And then we
We
move
can.
on. What are the objective of financial statements? Why do we need
Mm-hmm.
to draw up financial statements? What are the objectives really? So the objective of financial statements is to provide information about the financial position, the performance of the business, and the changes in financial position of an entity. So those are the three objectives of financial statements. Okay? The first
Mm-hmm.
one, the business wants to see its financial position. That's why you draw up your statement of financial position, in other words, your balance sheet. So but your balance sheet is mainly
Mm-hmm.
used to check the in what position is your business. Are you
Okay.
having a lot of liabilities more than your assets? Because obviously your assets need to be more than your liabilities. You understand? For your business to continue
Mm-hmm.
running. So in what position is your business in? Is your business really able to continue running in the future or not? And then the next one is the other one is the performance of the business. How is
Mm-hmm.
your business performing? And this is shown in your, or this is calculated, the performance is calculated in your income statement of comprehensive
Oh.
income. Yes. So you are interested, the objective of this statement, of the income statement, it's to see whether your business is performing good. Is your business really making profits or just making losses? Ne?
Mm-hmm.
And then another one is the changes in financial position of an entity. And this will come next year because this has to do with your changes in equity. And the statement is called your statement of changes in equity.
Oh, first.
How did your equity, or how did your capital change within during the year? Now, this is for next year because in fundamentals of accounting, we only deal with sole trading businesses. Ne? So the changes
Yeah.
in equity will
Okay.
come. Yeah, the changes
Mm.
in equity will come next year when you are doing companies, when you have shares and so on.
Oh.
Yeah, so that is for next year.
Mm-hmm.
So the financial position is reflected in a financial report known as a balance sheet, while the
Mm-hmm.
financial performance is reflected in a financial report known as an income statement. So if you're asked to give the objectives of financial statements, you should be able to give them.
Okay.
Okay. And then we move on to the another important thing, which is the
Mm-hmm.
underlying assumption, the assumptions of financial statements.
Mm-hmm.
So what do you assume when drawing up your financial statements? So we have different assumptions of financial statements.
Mm-hmm.
The first one is accrual basis. Many financial statements are drawn up according to the accrual basis. What does accrual basis mean?
Mm-hmm.
Accrual basis means a transaction or event is recognized when it occurs and not when money is received. What does this mean? This simply means that if, let me say, you sell cakes, ne? You sell cakes and I come to you and buy on credit. So I bought, meaning an event took place, but then I did not give you money that specific time. So you do not wait for me. You do not wait for me to come give you money, and that's when you will record the transaction. The transaction is recorded as soon as you hand over the cake to me.
Even if you did not get money,
Even though you did not get money, that's when you record the transaction that sales of $100 has been made.
okay.
You understand? That's why we record creditors. That's why we record debtors, because of the accrual basis. So it says that in order to meet their objective, financial statements are prepared on the accrual basis of accounting. Under this basis, the effects of transaction and other events are recognized when they occur, and not as cash or cash equivalents are received or paid. Meaning that if in the exam you are asked to give the accrual basis, the meaning of accrual basis, you say that financial statements, or you say that transactions or events are recognized when they occur and not when cash is received or paid.
Oh, okay.
Yes, so the accrual basis assumes that transactions or effects of the transactions are recognized when they occur and not when money is received or paid.
Okay.
Yes. Okay, and they are recorded in the accounting records and reported in the financial statements of the periods to which they relate. Meaning that if you were supposed to pay your water and electricity this year for remember, each and every month you pay water and electricity, right? So at the end of the year, you realize that you did not pay your water and electricity for 3 months. You understand?
Yes.
Those 3 months, that the money that you have, those 3 months belong to the current financial year. So you have to record the amount. Let me say, for instance, you pay water and electricity, you pay $100 per month, ne? So
yes.
in total, 12 months, in total, you are supposed to pay 12,000 per year. Now come next year, at the end of the year, you only paid 10,000. You are supposed to pay 12,000 in total, but you only paid 10,000. So when you draw up your income statement, you write the actual amount that you were supposed to pay this current year,
which is 12,000.
which is 12,000. Do you understand? And then you recognize your accrual, because that is accrued expenses. Now the 200 that you did not pay is the accrued expenses. So in your income statement, you record the full amount, and then you recognize your accrued expenses in your balance sheet.
Oh, in your balance sheet.
Yes. And you know that accrued expenses are, what kind of account is that? What type of account is accrued expenses?
I don't know.
Okay. So if you have a paper somewhere, just write down this.
Okay.
Prepaid expenses and accrued income. Prepaid expenses and accrued income are current assets.
Current asset, okay.
Yes. Accrued expenses and income received in advance are current liabilities.
Accrued expenses
accrued expenses
Mm-hmm.
and accrued income.
Mm-hmm.
Sorry, accrued expenses and income received in advance. Sorry,
Accrued expenses. Eh?
and income received in advance. Accrued expenses and income received in advance
Mm-hmm.
are current liabilities.
Current liability.
Yep.
Okay.
Okay.
We
So,
can continue.
okay.
Mm-hmm.
And then another assumption of the business is going concern. Ne? So we spoke of the accrual basis. So we're moving on to the going concern. So going concern says financial statements of entities are usually prepared under the assumption that the entity will continue to exist for the foreseeable future. Meaning that when you prepare your financial statements are prepared under the assuming that your company will still continue operating in the future. Do you understand?
Mm-hmm.
So even when you are making decisions, you know that you are making decisions of the future. Now, in 10
Mm-hmm.
years to come, we are aiming that we'll have a lot of branches in Namibia. You see? That
Mm-hmm.
already you are using the going concern. You are assuming that your business will continue operating in the foreseeable future. So if you are told to explain the going concern, you say that financial statements are, or the entities or the financial statements are prepared under the assumption that the business or the company will continue operating in the foreseeable future. In the future, it will continue operating.
Okay.
Okay. So it is therefore assumed that the entity has no intention or need to liquidate. To liquidate means to be sold off. So when they prepare their financial statements, they prepare them with no intention of selling them or closing down their businesses or closing them off.
Oh.
Yes. So if such an intention or need exists, the financial statements may have to be prepared on a different basis. So if they come to a point where they want to sell off their businesses, then their financial statements will be prepared with a different basis and no more a going concern. And that you will do in accounting 2A.
Oh, okay.
Yeah. So those are the two assumptions, ne? So those are the two assumptions of preparing your financial statements. So let's move on the qualitative characteristics of financial statements. Now, what are the characteristics of your financial statements? What do they need to have? Because if you do not give characteristics of financial statements, or the things that they need to present for them to be correct, then companies will end up presenting their financial statements in whatever way they would want, which is wrong. They need to be certain characteristics for them to be presented in a correct way. So qualitative characteristics are the attributes that make information provided in the financial statement useful to users. Now, those are the meaning that for the financial statements to be correct and very useful, they should have certain characteristics. They should be presented in a certain way. Ne? Meaning that I cannot just bring you a balance sheet or my balance sheet which does not have some accounts are missing, some information are missing. I don't understand, like the way the format is wrong. You understand?
True.
So there should be certain qualities that make
Right for me. Yeah.
useful. There should be certain
Okay.
qualities that make them useful. So we are going to look at those qualities or those characteristics that make them useful. The first one, your financial statements should be understandable. The first one is understandability. Users of financial statements who have a reasonable knowledge of business and economic activities and accounting and a willingness to study the information with reasonable diligence must be able to understand financial statements, otherwise they serve no purpose. This simply means that you cannot just bring me your balance sheet with a format that I do not understand and you really want me, maybe I'm a lender and you really want me to give you a loan. No, your financial statements should be understandable. They should be presented in a way that I can understand, I can analyze. So, however, information about complex matters should be included in the financial statements because it has relevance to the economic decision. This simply means that every information of the company should be presented, especially now the complex information such as your loans, all the assets that you have, all the important accounts that affect the decision making purposes should be presented in your financial statements. Let me say you have a loan, you took a loan from the bank, but it's not even appearing in your financial statements. So it's already wrong.
It's already wrong, it's true.
Yes, you cannot omit. You cannot omit important information. You should never omit important information from your financial
Financial.
statements. Do you understand?
Yes.
Okay. So the meeting will end itself within a minute. So once
Okay.
it's end, I'll just restart it again.
Okay.
So the next one is relevance, meaning that information should be relevant. They should be true. Information, they should be material. Meaning that if you buy a pen, you cannot record it in your balance sheet. It's just a pen.
Balance a pen.
Like, how can you record a pen like in your balance sheet? It should be material. It should be relevant.
Yeah, it's true.
Will a pen affect decision making purposes?
No, 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 no.
No, it won't. That's why you need to look at the kind of transactions that